Welcome to the StockManor.com studios here in the Black Hills of South Dakota. I'm your StockManor Brian Johnson, making professional trading simple. And we are about to come into Christmas week. So, what can we expect? Well, based on the charts and based on the time of the season, I would have to go out on a limb and say that we can expect more of the same. And that is, notice how we've been in this trading range for a good month and a half. Every time we've reached the bottom of this trading range, we have bounced and moved back to the top of the trading range. No reason to think that won't happen here. And I think it's actually set up pretty nicely for such a scenario to occur. We are coming into Christmas week. You've got people, every day I would suspect that every day we will probably see the volume slowly start to drop out of the market as the big dogs take extra time off, go spend it with their families, get ready for their weekend getaways, whatever they're doing. And with that, we've seen that lower volume has brought, in most cases, higher prices. So here we are. Isn't it unique how at the end of last week we ended up right back here at the bottom of the trading range, and now we've got all week to slowly grind our way up towards the top of the trading range. So I think it's a very plausible scenario that we will just see this thing slowly grind its way back up towards the top of this. We may even see it towards the end of the week, maybe pop its head above it, just because nobody's around to really control it, and that allows the bulls to kind of push things around as they want to. So I'd be watching for that this week. Obviously, we'll have a better idea after Monday night, but we just have to take what we know. What do we know? We know that every time we've hit the bottom, we've retreated to the top. So here we are once again, hitting the bottom, working our way back up towards the top. And so that is what I'm obviously planning for. As we look ahead, you can see us in the trading range on the Dow, moving within these two lines. It's very difficult to trade in the middle of the range, but you can play around with the 20-day if you'd like. It hasn't really been much for support or resistance lately, but if you wanted to go, long over the 20 or however you want to put, that's great. I would just tell you that during this week, kind of be cautious. We are done with options expiration week, so I don't know if you wanted to hold overnight. I'm certainly not going to tell you not to do that. I don't see any reason why you couldn't, especially if you were long. I think for this week, in the overall bigger picture, I definitely think there's more risk to the upside than there is to the downside. So if you're looking at buying options, that might be a few months out. You're definitely, your risk, I think, is more to the upside than it is to the downside. However, in the short term and over this next week, if you're long and the trade works out well for you during the day and you're not sure whether to hold overnight or not, I don't see any harm in holding overnight in a long position if the markets have been moving that direction all day. Moving on to the NASDAQ 60-minute, you can see us approaching this 1815 overhead resistance again. This one is a little bit ahead now of where the NASDAQ was. I'm going to call 1780 to 1850 the range of the NASDAQ. And so we are only 8 points away or so from 1815. And it makes sense to me in the bigger scale because you would think maybe there'd be a little bit more bullish behavior coming into Christmas week with the techs. You're talking electronics, TVs. Sure, I would see that investors would be a little bit more apt to buy those particular stocks coming into the Christmas time. So that makes sense to me that the NASDAQ itself, from a daily perspective, is ahead of where the S&P and the Dow are. Looking ahead to the index weekly, you can see us hanging out here towards this upper resistance. From a weekly perspective, though, this has to be viewed as bullish. It's still a high base formation. I can maybe even draw another line in there and make it an ascending triangle type of a formation, which is still overall bullish. So until it breaks way back down here, I'm not looking at the bear case quite yet. I still have to remain neutral to bullish on this market. SPX on the 60-minute, you can see us stopping right here at overhead resistance, 1102, 1103 mark. Still a little bit of work to get up and over here, but up and over 1105. I would still 1105 to 1106 probably takes us back into the 1112 to 1115 range. At this point, no reason to think we can't grind up there by the end of the week. As you can see, here's the bigger trading range we're looking at, 1085 to 1115. And we're right in the middle of it right now, just poised, waiting for the next move. We've seen this before where it moves down, a little bit of a white candle, moves down to retest 1085. Here's a move down, a little white candle. Maybe, like the Dow, the S&P shows some relative weakness with the other overall markets, and maybe it does bounce down here and retest this 1085 or 1090 level before moving back up. So we'll see what Monday brings for the different indices. We might see relative weakness in one and some more strength in another, as we've seen over the past couple days with the NASDAQ and the rest of the market. SPX on a weekly, grinding its way up towards the top, still in an ascending triangle and or high base formation. Still bullish either way. VIX on a daily, you can see it. I'm going to call once again this line here, this line here. This is our trading range. Just looking for a markedly obvious move between one of those two areas. If we move down, we still have this dotted line. We still have this lower support to hold up the VIX if it gets down into this area. Once again, the lower the VIX goes, the better off you are if you're an options buyer. You love to see the VIX at a low. You can get into those at a much better premium at that point. Not so good for your options sellers necessarily. Apple on a 60-minute. Playing around in this little channel. I've been talking to you about this. I really like this. Now, I took a little better look at this over the weekend. I'm really liking this over 196. I've been saying 198 or 200, but you know what? From an intraday perspective, I think I might look to play this thing over 196. Put a little stop in at about 195, 195.50. That's up to you. But over 196 isn't a bad intraday play on Apple. If it continues to move up, you're going to want to watch the 197 level. If it can get up and over that area and close above that level at the end of a day, you might want to hold it for a day or two and just see if the bullishness continues in Apple. From a weekly standpoint, holding here at the 190 level, just more or less chop, but we do have a crossover in the MACD. That does not mean that we are going to collapse or anything anytime soon, but it does mean if you have been long from any one of these places back here, you'll want to be poised to be careful about your long position at this point. ABT from a 60-minute is one I put on for this week's watch list. You can see us right back down here to very strong support. From a daily standpoint, this is what I'm watching here. You can see us. I'm really watching to see if we eventually break this 53. So if markets for some reason move down this week, I'm looking at this one as a shorting opportunity. Look at it below 53, and more conservative would be below 52.50. ADSK I added this week. If we get a move up in the markets, watch for ADSK to break up and over this triangle it is in. Get above 2470, 2475. I think this could make for a very good long play for this week. You can see it here on the daily. If you're looking to swing trade this, you're going to want it to get over the 25, let's call it $25.25 mark to swing trade this to the long side. ESS on a 60-minute, pulling its way back up here towards overhead resistance. From a daily, though, you can see we are out of this triangle we've been watching. So a move over 85.50 is still my next long entry. FAS on a 60-minute cleaned up the chart a little bit. It was getting kind of messy. You can see this overhead trend line is what we're watching on FAS. So I'm calling FAS long over 72, 72.25, 72, over 72 or over 72.25. I think FAS could be a decent long play in the near term from a daily standpoint. You can see from a swing trader's perspective, you might want to wait till it gets over 73.50 if you're going to look to hold for a day or two. FAZ on a 60-minute. This is kind of the last line in this, not the last line in the sand, but a strong support level. How about that? Both here with the green line and the blue line, it gets below that, and FAZ could fall and take us back into the daily triangle we were watching. Been really watching for a break over this triangle. We got it. Then we had to watch for confirmation to show that it was going to hold, and it has not given us that yet. This next day, pulled it right back down to the support line. If it gets back into the triangle, this could have been a head fake, and we're watching for a break to the downside at that point. ICON icon. I really like this little bull flag. I'm going to leave this one here. Up over 1220 for a long play. And ICON on the daily point. If you're going to swing trade this, up over 1250 is the most conservative entry you can get. But over 1250, I think, could make for a very good longer term long trade on Icon. That does it for today's video. That should get you prepared for the new week. Give you some stock trading ideas. I think there's some really good ones sitting there. A lot of them are from last week, actually. They just didn't perform last week. But they're setting up still extremely well. So be watching those as well. So if the indices are moving sideways, look to your stocks to make some money in the coming week. I will be back with you Monday night. Remember, protect your money, because nobody cares more about it than you do.